the market starts to move. You know where it's likely to go. You know what it's reaching for. There's an equal high, there's a single high up there, or it's going to a fair value gap that's above the marketplace. You know, in your heart of hearts, in your gut, you know exactly that son of a bitch is going right up there, but it's already started moving. So what do? Plunge in there with a demo, buy it right there, or sell it if you think it's going down. But then what happens is you're now, in your mind, you're saying, I don't care if it comes down against me because it's a demo, it can't hurt me. But if it goes up there, fuck yeah, I was right. Look at that. Woo, video game trading. What are you teaching yourself? Don't worry about the loss because it can't hurt you because you're in a demo. But feel good about the transaction if it goes up there because you're right. Now stop and think about that for a second, folks. You're doing everything wrong. You're teaching yourself not to respect the risk. That's the paramount issue when you go into trading. You have to have a stop. You have to know why you're putting a stop there and how much are you risking. Some of you are just doing simple average 50 contracts or 50 lots on your trades when trading gold. You're not trading 50 contracts of gold. And you're not adding every time it goes up 2 points. You see the MT4 guys that they got 30 trades of the same market and their only difference in price entry is 1 or 2 points. And they're showing you their $50,000, their $60,000, $70,000 wins, all stacked up. I have never liked a post like that. You didn't take that trade. That's not a real trade. That's just you seeing what will happen if you did that. And you're getting drunk on math. And that's dumb. When you're looking at a market move that you think is going to go to a specific price level and it's already started, you wait for a smaller time frame fair value gap. When it trades down into that, then you can engage it. When it starts running, observe it from that point on. But you have to know where the stop loss will be, and that is below the fair value gap. So when I started breaking down the market like that, I said, okay, soybeans started taking off. I missed the move. Live cattle. These are all commodity markets, by the way. You're probably thinking, what the hell is he talking about? Soybeans and live cattle. I was a commodity trader when I first started. So when I started to trade in the bond market, the 30-year treasury bond, and when I was trading the S&P futures contract, I would see these movements after the fact sometimes. And I would feel like I got to rush to get in there. And I missed it. So my focus took me into studying how I could engage a move that already started. Because my tendency is, tell me something that you can't do, and I'll find you a dozen fucking ways where I can do it better than you could ever imagine. Because I have a chip on my shoulder, and I'm obsessively compulsive. And a grandmother that no longer lives anymore told me something that scarred me. Said I was lazy when I wasn't lazy. I was fucking tired. And she was expecting me to do something that was beyond my capability as a 11-year-old kid. So when I had her tell me I was lazy, honey, you're lazy, I was like, you said what? So that's why you see me work the way I do. My work ethic in everything I fucking do is off the charts. I always over deliver. I always do that because nobody's saying I'm fucking lazy. I can tell you you're lazy. I can say that to you because if you're not putting in hours each week, if you're not making dozens of pages of notes each week, not 5 little lines on a page and scribble and say, oh, I did the work, here's my notes. That's fucking bullshit. That's comic strips. Okay, that's what that is. You're wasting time. People that want to learn how to do this, they're going to pour themselves into this and they're going to get what they're looking for and find more than they were looking for. So I had to go in and figure out how to compensate and build and develop a coping skill for this fear of missing out. See, you have no idea what the fuck you're doing, but you want to go in there with a funded account or a live account and try to make something happen, ignoring the risks, not really understanding the detrimental barriers, obstacles, impossibilities that you're building these walls in front of you by doing it incorrectly. They're going to weigh on you heavily, mentally. You're going to see them as they're just too much for me to get through because you're doing it wrong. So I'm not saying I'm smart, okay? A lot of prayer went into this, a lot of prayer. And you can be an atheist, you can believe whatever you want to believe. I'm telling you, this is how I got here. When I looked at moves and I couldn't get myself to accept the fact that I wasn't smart enough in my early days to see that move before it started, and you had a big down day, I knew at that moment it's going to go down to this level here on the daily chart, or up here above some old high daily chart, in deference to the bias if I was bullish or bearish. So I wanted to find a way to build a coping mechanism that would make sense for me, because nobody in books, none of the books, I got over 2,000 of them, courses, everything. I bought everything you can put your fucking hands on. If it was released in the 90s and the early 2000s, in 2006, like that was the last time I bought anything. And it was always the same bullshit. And the things that I teach on, none of these jokers talk about. Precision elements, time, where to get in, why your stop loss should be where it's at. Everything you learn in retail is stop below the old swing low if you're long, stop above the old swing high if you're short. And it's all directly related to the percent of risk that you're willing to take as a trader, which is the universal 2%. Everything about that's wrong. Everything about that shit is wrong. And you're doing it thinking that you're going to be the exception to the rule. And then you can go on social media and say, I climbed a mountain. That's it. I'm putting my flag here at the top of the mountain. No one's ever done it like me. When you don't realize what you're learning is misinformation. You have so many factors against you doing that shit, but it doesn't feel that way because you bought the book. You paid for the book. You took the time to read that book. You have now joined a religious cult. You think I'm a cult leader. That's a cult. Retail theory is a cult. It keeps doing the wrong shit that you all keep sipping the Kool-Aid thinking you're going to be able to get something out of that. You're getting the same shit, the same bullshit everybody else gets. Losses, drawdown, blown accounts, and misery and regret because you are falling in love with a market in a potential experience to change the course of your life, but you can't make it work with the shit that you're trying to spend money on. The smart ones say, fuck this early and say, I can't do this. And you don't ever invest any more money in the retail stuff. And they just say that nobody's making money. And it's not true, but largely it's true. So I had to go in between the overbought and oversold conditions with my retail bullshit that I was trying to use. And I come up with ways how I could go in and engage. And then once I was made privy to how markets are really booked and met with real market makers, not Goldman Sachs people, okay? None of that shit. Not trade desk managers that are controlling the flow for their customer base. That's not a market maker. You're a dealer, okay? That's all you are. You are not making the price. You can engage and transact in that price feed at that very moment, but you are not fucking making the market. When you discover how all this shit is rigged and it's designed to do these certain things at certain times of the day to deliver a certain high or low, it changes everything. It changes everything. You quickly put aside the very shit that they're poisoning everybody else with. All the misinformation, all the bullshit. And you focus on the stuff that matters most. Where's the truth in all this stuff? If it's overbought, oversold, then that's what causes the market to go up and down. If it's supply and demand, and that causes the market to go up and down, then why the hell is it that shit isn't making millionaires every single time someone sits down with it? Why aren't they all finding success? Why aren't they finding precision? They're not. Because it has a resemblance It resembles something that they saw work in a book. And when I bought all these books and I bought all these courses and I subscribed and bowed my head down to all these gurus, I was a young man too. And I believe there's people out there that should have been worshipped, that should have been lifted up and held above everyone else. Heroes, titans. There is none. I'm not one of them. And your friend and family member on fucking social media that you think is growing to be into be some hero level shit. They're all people just like you and I. And the more they show the shit in hindsight, and they can't teach it and prove that it can be transferable knowledge with precision-based elements with time, then it's all just retail. And retail is just a catalyst. A good money manager can make money with retail. A good money manager can make money with a heads or tails flip of a coin. I didn't want to be like that. I wanted to be someone that knew exactly what the hell they're doing, why they're doing it. And if I am wrong, I'm okay with being wrong if I understand why I was wrong. But when I was using retail shit, it never made sense why my trade, when it would fail, I got stopped out. Why the fuck did this happen? The stochastics was coming down. The moving averages on all the time frames were going down. I had a fucking bear flag. Everything was going lower. And the people on CNBC, it was FNN back then, Financial News Network. Shit's different now. They were talking about, oh yeah, the market's going to go, you know, there's a bumper crop of soybeans, which means there's a lot more supply, so therefore the price shouldn't go higher. So I'm going short. I got everything in my favor, right? I got the fundamentals. There's a bumper crop. So that means a whole lot of soybeans are hitting the market. There's no reason for it to go up. And here I am, I'm going short. I'm in there. It's already diverged bearishly. It's moving down. All the moving averages are sloping down. Everything looks fucking great. I'm looking to make 50 cents on this move. And what the fuck happens? It goes up 18 fucking cents in the same day. Now, how do you rationalize a response to that? That makes sense, that's palatable. You don't. You put your fucking fist through the fucking monitor like I did. Pick the fucking broken mechanism that was still resembling a monitor and throw it across the fucking room. That's how I coped with it. That's exactly how I coped with it. And I went through a lot of monitors. A lot of monitors like that. I wasn't prepared to have multiple monitors back then. I have a lot of monitors now, but if I didn't know how to trade, it would be very, very costly for me to have that coping skill today. So I had to go in and figure out why I'm doing what I'm doing. And if I'm wrong, I'm okay with being wrong because I understand I'm wrong. The market's right. I'm wrong. The market's right. So I have to do what? I have to align myself with the market. Not align myself with the guru's logic. I got to align myself with an indicator. Fuck, I do. I don't need to do that. I need to align myself with the open, high, low, and close. That's what I'm aligning with. That's why my charts are naked. That's why I'm showing you only annotations to take your attention to a very specific element about a candle, a level, not a fucking zone. Okay? When I'm talking about a fair value gap, what levels am I talking about? The highest point of the fair value gap, the exact middle of the fair value gap, and the low of the fair value gap. That's 3 finite levels. It's not a zone. I'm not going out there and pulling one out of my ass and saying, well, we're going to do a supply zone here or a demand zone here. And where are you going to buy in that? Where are you going to sell in that? That's why it's a fallacy. It's all bullshit. It leaves enough subjectivity so that way they can always go back and say, look at this zone. Look how it reacted in this zone. Fuck that. I'm telling you a very specific level. Fuck everything else. Everything else is bullshit. I'm telling you exactly when these gaps should not fill. So that means what level should you be focusing on? The high end of it or the low end of it. Not the middle. Not the opposing end of it. See a difference there? That took decades to get that. That took decades to know with confidence that I'm going to be able to take this trade, enter here, my stop loss should be right here, laser precise. A lot of prayer. And that still quiet voice taught me that. When nobody, not like what you're hearing here, a foul mouth, Manic. I had nobody sitting next to me encouraging me along. And I had to become a fiend and dismiss everything and everyone around me. Relationships, friends, hobbies, all of that. I cast it aside. And all of my waking consciousness was poured into this. While driving a truck with my left foot laying up on the steering wheel, steering, while I'm eating a cup of fucking noodles, I'm looking at a chart book going across the Key Bridge. Is that safe? Nope. But I was dialed the fuck in. High winds could have pushed me into the Jersey Wall part of the bridge, and it caused all kinds of accidents. That's how recklessly I was pouring myself into this. All day long. All day long. Sleeping sometimes 3 hours, maybe, and getting up and doing the same thing. On Saturday, driving down to Fayette Street to a nursing home to fill their vending machines from my car. My Eagle Talon TSI all-wheel drive white car. I've always preferred white. Go down there, service that. The whole time, the markets aren't trading, but I got chart books laying in front of me in the machines as I'm putting candy bars in there. I'm pouring myself into it. Maniac. That was how it was. And you have to have that same tenacity. You have to know that you're going to do this no matter what. Anybody that's around you that's telling you negative shit that you can't do this, you shouldn't do this, you're wasting your time. Fuck them. Fuck them. Fuck them. Because I'm going to tell you, every one of my fucking friends, when I first started doing this shit, they said, you're crazy. You're going to lose your ass. I lost my first account and second account and third account. I did. But you're listening to me now, aren't you? You're seeing all these other people that do what I'm teaching and they're making money. You're seeing your charts paint just like how I taught you it would. My friends and family said I was going to fail. They said this was never going to work. I would never figure this out. It would always be a gamble. It would never be a way for you to be able to time the markets. You can't do it. I'm taking you live into 1 minute candles. And I'm telling you exactly what the fuck it's doing before it happens. Perfectly. I was not going to fail. I was not going to be talked out of this. I was not going to be influenced negatively to the point where I would admit failure and go and run off into my life and do whatever the fuck I was going to be doing. Fuck that. I have lived this. November 5th, 1992, 9 p.m. on a Thursday night in Chase, Maryland. That's where I was. When Inner Circle Trader was born, that's the birthday. I came into this world on August 8th, 1972. 7:11 p.m. That was my actual birth date. But Inner Circle Trader was born November 5th, 1992 at 9 p.m. on a Thursday evening in the family room of my aunt and uncle's house that I was paying room and board $50 a week. That day, I remember it. I was so excited. I'm going to make $1,000 a month and I'm going to retire at 40. That was how I started this whole journey. That was my plan. And it morphed and evolved and became a obsession. And I said many times, maybe this isn't for me. When I was losing my accounts, not knowing how to trade initially as a 20-year-old, I just was trying too hard to do too fast. Over trading, not understanding risk management, trusting the patterns more than understanding the character flaws that I was bringing to it, which is I demand precision. I demand immediate response in price. I wanted to do what I wanted to do, and I wanted to do it faster than I wanted to expect it before I put the trade on. They're all unrealistic expectations, especially for someone that had no experience. So over years of losing, blowing my account, working really hard, doing part-time job. Only on the one single day of the week, which was Sunday, I was delivering pizza on Sundays because my vending job wasn't paying me enough. I made $183 after taxes in my check, and my boss paid me under the table $50 in one. Now think about that. $183 a week and 51s. And they're trying to sell a book for $30. That $30 book was a lot of money to me. So on Sunday, I'd go down to Middle River with my Domino's uniform on, grab my sign, put it on top of my car, and go out there and do magic tricks for kids at the door when I got their pizza handed off to them. I had my little magic trick real quick with the kid was there, boom, and that would give me a tip. And sometimes I would make $5 a house. And that is how I funded all of my blown accounts. Because I made the mistake of doing a Nations Bank. Nations Bank doesn't exist anymore, but I took $2,600 off a Nations Bank credit card. That was my first soiree in real trading. And I worked really hard to pay that off and did it again, funded another account with the $2,600. So it wasn't easy for me. We didn't have funded accounts back then. And frankly, that wasn't enough money to trade with. Looking back now, it was like, no wonder it was so easy for me to fail then. I wasn't properly funded. I had too little money, no experience. But I had to pour into these areas that were weaknesses for me because they would be periods of where it would invite impulsiveness. When a move starts happening, then I can see right away what it's going to do. My mind would feel like I got to go out there and just do something. I got to chase it right now. And the times I did it would hurt me. So I would study and study and study, and I would see these reoccurring things where these three candles all the time kept popping up. There was always this thing in between the middle of the moves, the real move, the highest high and the lowest low of a price run. If you start looking at your old data, and anytime a price run does that, find the 70% and the 30% range. In that range, you're going to see one or two fair value gaps. If you trade with what I'm telling you how to trade with when you see them, that's not chasing a move. That's not chasing price. You're engaging in something that's going to deliver on a larger scale, on a higher time frame price run. And then when I slowly transitioned out of trying to pick the high for going short and pick the low for going long, it was very liberating for me because I demanded precision and I hadn't grown into that yet. I grew into that over years of doing it. But I found the confidence and the ability to stay with it by trading the stuff in the middle of the moves, that meat on the bone. Now I can strip a bone end to end and get every little piece out of it because I'm nuts with this. But you can't look at what I'm doing now and think that's realistic, because that's the same shit I fell victim to when I first started. Reading books from people that didn't do anything, couldn't do it live if they were in front of you. They're showing you everything perfect in the static charts after it happened. I'm not doing that with you. I'm doing it right when it's happening. I'm calling it before it happens. I'm showing you, look here, and it goes there. If I'm pointing above, your mind should be, okay, we're here at market price. He's pointing up there. So my mind should be, how does price deliver from where it is right now when he put that tweet out to where it goes to that level? What formulation of up, down type movement in price candles materializes? By studying that, even in old data, that's back testing, okay? You'll see these reoccurring signatures. Signatures are things that repeat in price delivery that are not coincidence. They're designed. It's because it's being controlled. This whole idea of being in at the highest high and the lowest low when you're trying to sell short and buy long. You need to put that aside for right now. That model that I taught in 2022, notice it didn't teach you to get the actual high when you're going short. What did I take away from you? The necessity of being right. How do you know when an equal high is going to be broken out and it's going to continue, or if it's going to go above a relative equal high and then a shift in market structure and then goes lower? That's what that model teaches you. It teaches you don't fucking worry about it. You're expecting the market to do what? Expand one direction or the other based on a weekly chart. What's the weekly chart likely to be reaching for? What does that mean? The same logic we're talking about in any time frame. Is it drawing up to an old high or equal highs? Or is it going up into a fair value gap that it hasn't reached up into? Or is it more likely to go down below old low or relative equal lows on the weekly chart? Or down below into a inefficiency, which is a fair value gap on the weekly chart. So you have to figure out, is it more likely for that weekly chart to expand, not to close up or down? Is it more likely to have a movement, expansion on that weekly candle up, or is it more likely to go down? That right there sets the stage for the 80% bracket for you to be right for your trades. And if you just operate like that, engage in your trades just like that, you won't have max loss days. Teaching to you, my haters now. Okay, that's where you're blowing your shit. When you're doing your live streams and you're blown out, you're going against that. And if you just would put your ego aside and just listen to me, you don't have to rep me. Just listen, fix it, leave a better legacy for your kids. Once you identify that weekly bias on the weekly chart, is it more likely to have a big move up or a big move down? And it can only happen as small as one session. Like the big move for the week can happen just in the morning session of one day. And that creates that movement or expansion in the weekly chart. And it's done. You've fulfilled your bias for that week. But when folks hear me talk about this, they think when I'm talking about the weekly chart, I'm trying to predict the closing price of the weekly candle. That's not what I'm doing. I'm just looking for factors that would lend well to determining whether or not that weekly candle that we're forming right now or about to start later tonight for a new week, is it likely to expand up or is it likely to expand down? That right there is your 80% threshold that will give you the biggest edge in deciding on how you're going to trade going into the new week. But what if I'm wrong? Okay, but what if you're right and you follow the logic? It will reward you for being diligent about following the rules. If you're wrong, it won't matter because that doesn't mean it fails. It just means that transaction, your opinion about what you thought you were going to see in the market didn't pan out that instant, that time, that interval, that transaction. Just like a flat tire going to work. Just like a cake you left in the oven just a little too long. Just like when you're in the drive-thru, you're waiting 15 cars deep. You get up there, pay your shit, up the road you go. Oh, shit. They didn't give me my french fries. I'm already half home. Fuck it. Inconvenience. You lost something. You gonna go back and eat there again? Sure as fucking right you are. You absolutely are. But you're not gonna do what? You're not gonna turn that fucking car around, waste the gas and time, go right back through there just to get your fucking french fry. You're not doing that. So what do? You eat it. That's just an inconvenience. That's the life. That's life. And this generation doesn't get taught to accept those types of things. And you're all coming into this with this millennial mindset and you're all going nuts because you can't have it your fucking way here. You got to align yourself up with this. This market runs the show. And you have to align yourself with this expectation that's realistic. And it has to be uniquely yours. It can't be just because I say so. Not because I'm interested in that market or that specific setup. I have lots of setups. And I might not be watching a chart at the time that you say, oh, well, why didn't ICT look at this fair value gap? Or why didn't he consider this down close candle as an overblock? I'm not looking at that setup like you're looking at it. Don't be discouraged by that because That might be the very model that is yours, and it just didn't give you a setup then. What does that mean? It didn't give you a fucking setup then. Can't lose money on that one, right? But it moved. So fucking what? Bitcoin went up too. I ain't it. I don't give a fuck. I don't care. I know I'm going to catch moves this week in ES. I know I'm going to. Can you guarantee that you're going to make moves in Bitcoin? Crickets. So you're all hoping it's a moon run. I don't need a moon run. You don't need a moon run. You need consistently delivered setups every week, not a hope and a prayer. So between the moves, the highest entry point and the lowest entry point, using retail logic, my mindset went to the middle of the move. That's the meat. That's the biggest portion. The longest duration of price movement is in the middle, between the highest high and the lowest low. In any price run, any time frame, study it. And when you see that fair value gap in there, study it. How many times does it close that gap entirely and fill it in? How many times does it just go halfway? How many times does it just go in it just a little bit for institutional order flow entry drill and then continue on? And how many, here's the main thing, how many times does it go beyond the fair value gap that would stop you out if you were in line with that move? See, I've taught you how to focus on where the market's likely to go. If you got consistent with that, the next stage of your development is, where should you place a stop that is reasonable in terms of risk and range, that is a repeating process that doesn't deviate much? In short, where do you place your stop that allows you to put a low risk stop loss on, but you won't fear it being stopped out? But if it does get you stopped out, you don't care because you're probably dead wrong about the whole idea, and you would want to be out there anyway.